Good morning, everyone. I know that the past today is my third day being on social media. I haven't done it for so long, and I've been coming on almost every day these days, but it's all good. So if you guys are new in our social media today on talking about mortgage, we talk about mortgage almost every Wednesday as possible, unless if we have closing or if I have showing and open house and all that kind of stuff. Otherwise, we are here. So my name is Aida Tazara. I am a CEO of Gojo Realty. I am a licensed real estate agent and plus a team lead. And my business is all over in real estate. Being a real estate agent and also property manager. And in addition, I do commercial as well. So I dab on a lot of different aspects of my business. I love what I do and I enjoy what I do. And today it's hot in Minnesota. It's possibly right now close to 80 degrees. I decided to go out and did my 10,000 step. I put it in. It was hot. I was drenched, like sweaty and all that. And I'm like, let me give my energy to you guys this morning. So I will hand the mic to Peter.
Hey everyone, my name is Peter Jerf. I have custom-made mortgages. We're a mortgage brokerage licensed in the state of Minnesota. So everything we're talking about is specific for Minnesota. Every state has variants, but in general, most of what we're talking about applies to everybody. So I think I'm getting technical again, but yes, so we're licensed in Minnesota. It's me and my brother. I just messaged him. Sometimes he can join us, sometimes he can't. So Nick might be on here. We worked with Ida going back to 2018, 19, I think. So, yeah, so we are here to help. And I think you said today we're talking about credit, right?
Yes, credit. Yesterday we talked about a little bit in Amharic, and I told them to come and visit us this morning as well. Credit. So, yes, I am not single. Whomever that asking me a question, I've been married for the past 20 years, and TikTok people are messaging me. And also, yes, I am Ethiopian. Every Wednesday, we speak English in our platform to help the new generation that who born and raised in the U.S. that who does not speak Amharic, that will be able to help them out to achieve their investment. Means that we are here to give you guys the 101, 102, 103 of financing, like how you can build your credit, how you can, buy your property, how you can do this and this and this. Every Sunday, I am in my platform at 6:30 p.m. in Eastern Standard Time. We talk about an Amharic for like 4 or 5 hours. So there's a lot of parents requesting this platform once a week, at least that if we can talk about in English. So that's why we are here. With that said, that's a different subject. I would like for us to talk about credit, right? What is credit? We wanted to have Peter to define for us what is credit is, how important it is in Ethiopia, in the US. In Ethiopia, we don't use that. Any other country, they don't have a social security number to build their credit. So detail, what is credit? Why we need credit? Why it is important. And we'll talk about this thing in detail today. And if you guys have any question, please write it, because we don't usually answer question on the what do you call it? On the
on the like request to join the video. Is that what you're trying to say?
No. Because while we're teaching, sometimes people put questionnaire. They put questionnaire in their thingy, and then we won't be able to answer it like in between what we're teaching. So
comments, okay.
On the comments, yeah, I can't even think today. So I apologize. Too much sun, vitamin D. So Peter, so what is credit?
So in a simple explanation, the credit system in the US in the late 80s, they started creating these things called credit scores to measure how much. They tried to get a universal system so that way banks could look at that and say, okay, this is how much we can trust you financially, purely financial. So it's evolved over the years. It's still changing, evolving. How they create those numbers, we could talk about that for days. There's a lot of opinions on all sides. But in a simple terms, when you go take out a loan, whether it's a credit card, whether it's a car loan, personal loan, any type of credit, whether it's revolving credit with credit cards where the interest rate changes, or it's an installment loan like a car loan or a personal loan or a mortgage, the vast majority of companies will report this to these credit agencies. So the main three are TransUnion, Equifax, and Experian. There is a fourth one that's coming. Again, that's a whole nother discussion. And that might change things in the next couple of years, how they score things. There's a lot of debate on the legitimacy and accuracy of the current reporting. But the point of it is to be able, the bank can pull your credit, or if you came to us for like a mortgage, we'd pull your credit. And the biggest thing is your credit score. So each agency will give you a score, or each bureau, I should say. Ideally, for mortgages, you want over 680. We can usually go down to, well, I'll get into that later. But the whole point of it is for the bank and everybody looking at that to say, how worthy are you and how trustworthy are you that you're going to pay us back on time? That's two big things. Are you going to pay us back, and are you going to pay us back on time? So it is debt-based. So if you never take out any debt, you'll never have a credit score. That's one of the big critiques of it. I have a friend who hasn't had debt in about 5 years, so his credit score is going way down, even though he lives very frugally, so he never has to take out debt. He paid off his mortgage in 10 years, that kind of thing. So there's a lot of debate on why is his score low when it really should be high. They're trying to do some things right now to reward people for that. But when it comes to us in this specific situation, usually you want at least 3 lines of credit, open lines of credit. It can be everything from a credit card all the way up to a mortgage. And again, we can get more into the details maybe later as far as the difference between installment loans and revolving credit. Credit cards are revolving credit, so the interest rate can change with the market. Right now, I talked to somebody recently. They said they had a 35% interest rate credit card that they were trying to pay off. Even though mortgage rates, a lot of people say, hey, compared to 2021, mortgage rates were 3%. Now they're 6.5%, 7%. There's when it comes to credit cards, we went from, I know my wife has one through a credit union that I think is at 10%, which is very low for a credit card. But a lot of what we try to do, at least with us, is look at your whole picture. Because, for instance, and I'm kind of getting on a side trail here, but I had a client come to me recently. They had about $40,000 in credit card debt, and they were going to put about $70,000 down on a down payment. And so once we looked at everything, where it looked like, hey, it'd be better to pay off your credit cards, or almost all the credit cards, because the interest rate's so high, and then use less for your down payment on your house for 2 reasons. They're paying less interest, and it's also lowering their monthly bill. Because if you look at the credit card payment plus the house payment, if they put down that $70,000 versus if they paid off the credit cards and only put about $30,000 down, the loan for the home was bigger, but the total monthly payment was lower. So that also helps them get ahead of it. Now they can pay off that. I think they had a couple, $2,000 or something left on their credit cards. They could pay that off really quick. And then once that's fully paid off, they can start to either invest that money, save that money, or put that additional money towards their home payment and save on the interest of that loan too. So there's a lot of things we can do with it. But the other big benefit that I forgot to mention is their credit score went from like 670 up to like 715 because we paid off all this credit card debt. Mm-hmm. And most of the big banks, I don't think they do this. It's more smaller companies like mine. You have to ask each one individually. But we did this thing called a rapid rescore. So they paid off the credit cards. They sent me the paperwork they needed to get. I sent it to the credit agencies, and we updated it in about a week. And so in a week, their credit score went from, like 673 or something like that to like 715. And on the mortgage side of it, that once you go over 700, you're looked at as a lot more trustworthy. Because again, this whole credit situation is about how trustworthy are you? Do we believe that you're going to pay us back and you're going to pay us back on time? And so I'm getting kind of into the details, but that's the main thing when it comes to credit is just how do we assess you? Because we don't know you. You know, the bank doesn't know who you are. So they're trying to come up with a universal, fair system where everybody is judged the same. So there's no discrimination or anything like that. And look and see like, all right, can we trust you to pay us back? And this year specifically, it's getting a little bit more strict on credit. You can still get loans down to technically 500 credit score. Mm-hmm. Below 620, that's a whole nother discussion. But they are being a lot more strict, especially if you're looking at like a conventional loan versus FHA. Credit cards, I've heard they're being a little bit more strict. Some people are losing their credit cards with the bank saying we're cutting you off. So understanding credit is a very important thing, not just for the home mortgage process, but for your life in general, because even myself as a loan officer, they pull my credit. And if I have certain things come up or my credit gets too low, they're going to start questioning me as a loan originator, saying your credit, we have issues with your credit. You need to address this. Otherwise, we're not going to let you keep your license. So, like I said, too, it'll affect you over your life. So if your credit is usually about 700 or higher, you might pay over a lifetime hundreds of thousands of dollars less than somebody who has a 650, 600 credit score. And also your ability to get a car loan, to get a personal loan, to get credit cards with higher limits, and all those type of things are going to be affected by your credit profile. So we can argue, back and forth, what's right, what's wrong, how to fix it. But at the end of the day, understanding how it works is one of the major keys in the United States to getting yourself to financial freedom and having control over your, because even if you don't want debt, what if something happens? What if, I know 3 people this year that have had major car accidents. None of them, it was their fault. They all got T-boned by somebody running a light, running a stop sign, and one of them has a traumatic brain injury. And you want to, again, not trying to get all dark, but the whole point of that is they needed to be able to reach into their, savings. And sometimes it's nice to just have availability of credit to say, all right, we're going to address these things. I can go take out $50,000 loan because my debt collapsed and I need to fix it. Or I want to sell my house and there's stuff we gotta replace. Or we need to go get a car. And I was talking to my neighbor a couple years ago, my old neighbor, and he had a car, paid off everything. It was like 10, 15 years old. One day it just died on his way home from work. He was single at the time, needed help, or didn't really have any help to get another car to be able to go to work the next day. So he was right near a dealer. The engine had blown up, so it was pretty clear that the car was done. It wasn't worth it to fix it. He went to the dealership. He bought a car. He was happy with it, signed all the paperwork, went to work the next day, showing off his brand new car, didn't really pay attention to the terms of the loan, anything like that. First month he gets his bill, and he realized he had a 21% interest rate on his car.
Yeah.
And he said that's when he realized, and that was back when rates were probably like 4.5% for mortgages. So a car loan probably in that similar area. And instead he's paying 21%. He's paying like 5 times the amount of interest just because he didn't understand credit. And this is not one of those things, unfortunately, that anybody will sit down and say, hey, let me teach you about this. You got to go out there and you got to take care of yourself and say, let me learn about this and see how this works. And so for him, like that was his like aha moment. where he's like, why am I paying? It was 21.9%. So basically 22% interest on a car loan. And so he worked on his credit over the next like 6 to 8 months, and got his credit up, refinanced the car loan, and got down to like 7 or 8%, which was still a little bit higher, but significantly better. And I don't remember how much his car payment came down, but it came down quite a bit because now he's paying a lot less interest. And because the bank said, okay, you're not as risky. We trust you. Your credit's looking good. We're going to give you a better interest rate. And that also helped, if you can do that with your monthly bills across everything, your credit cards, your car loans, personal loans, mortgage, you can save. I've seen people literally save. I just had a client that was buying a house. They already owned one. They had about $60,000 in credit card debt. They had about $180,000 saved up. At the end of the day, they bought a new house, upgraded, and we took care of a lot of that credit card debt. Overall, even though they went from a house that was worth about $400,000 to a house that was worth $750,000, their total monthly debt payment went down like $500 because of how we structured it. And this was stuff nobody had ever talked to them about. Loan officers, we tend to focus just on mortgage, and we just want to get you through that process and we're done. And then you call us after you close and nobody answers the phone. At least my company, and I know there's others out there in other states too, that will focus more on the whole picture and also the education piece of what is credit, why is it important, and here, let me show you, because that's the biggest thing is we all want to see things. It's easy to see it. Even right now, it might start getting a little confusing. But if you can see it and I can show you, hey, here's some charts, here's some graphs, here's the number comparison, and you can see, hey, my total debt that I'm paying on everything was $3,500 a month. And now if we do this, this, and this, it's going to go down to $2,100 a month. And my credit score is going to go from 670 to 720. Now you went from like average credit to good credit. You're also going to see your credit cards come down, everything else on top of the savings that we just already realized. So I know I'm talking a lot, but credit is one of those things you cannot learn too much about because it will affect every part of your life. And also, just to finish this up, a lot of employers will pull your credit as part of a hiring process. And they will use that, fair or not, to judge you. If you got 800 credit, that means you've never had a late payment in the last 7 years. You don't have any collections. You don't have any charge-offs. You don't have any issues. And they're going to trust you. They're going to say, okay, if you have your finances together, we're going to be able to trust you at work. If you have 550 credit and somebody else has even 700, 650 credit, they might start to say, hey, maybe we can trust this person a little bit more than this person because they don't even have their own finances together. Yeah. And again, that might not be fair because nobody teaches us why it's important and how to do it. But for anybody on here, that's why it's important to learn about. And, everything's a journey. You don't have to learn it all in one day, but take it piece by piece and then start applying it. Because again, if you don't apply it, all this is useless.
Yep. Thank you. So you're right. I've been in the mortgage processing life back in the days before all this licensing stuff has occurred. And then, and right now I'm doing what? I'm in real estate, right? So credit, it does not matter when you started, and every time you have to fix and go on. You might make some mistake, you fix it and you move on. So like you said, the journey is just not once you started it and you stop. Credit is almost like your bloodstream, and you really have to deal with it closely all the time. So thank you for the explanation. Mickey, welcome. Good morning. Mickey, we were on social media last night. We were up until my time was almost 11. We talked about credit as well. Good morning.
Good morning. Good morning, Ida. Good morning, Peter. How are you? Thank you for having me here. I have a question for you. I think I joined towards the end. but I really want to understand few things when it comes to credit. Let me present my scenario, and then I wanted to hear what you think, or if it has any solution to it. So the scenario is, this client of mine has a credit score of 645, like 650-ish, 640-ish. So, but the problem is they have like 3 late payments in the last year and a half. And I was trying to get them conventional. So under normal circumstances, 648, of course, might not be a good rate, or might have a higher mortgage insurance. But DU is rejecting, so just to make it simple for everyone, I don't want to use industry jargons, but DU is that's where our software tells us that we can approve the person or not. That's the software. I'm trying to make it simple. I don't want to get into all the things. So
technical.
It's not
don't get too technical because we get confused.
Correct. But just I want to ask him from the standpoint of late fees. The credit score is okay, they can get, but late fees. So if there are late fees, is there any way to go around it, or that's a done case? Because this is exactly what happened with me, and I was not able to explain to my client in a way that they because what they see is the credit score is fine. They know that credit score can get them the loan, but the late fees are not allowing me to proceed. So I wanted to have a second opinion,
Yeah, so I would say, so first off, just a quick question. So the 3 lates, was that all in the same account or different accounts? And was that a revolving account or an installment loan?
Actually, both. 2 revolving and 1 installment. So there's 3 different accounts. I think the late fees are in total 4. I think on 2, probably on 1. I don't remember exactly, but like multiple late fees.
Okay. Was the installment loan, was that a mortgage or was that something else?
No, it's a car loan.
Okay. At least that's good. Yeah, I'm sure you know this already, but yeah, the mortgage lates are one of the worst ones when you're trying to get another mortgage loan. And I'm saying a lot of this more for everybody listening. So yeah, I would say one thing I've noticed, and I kind of made one little comment in my whole spiel there about, and you've probably seen this in your business too, since January, conventional, so for everybody listening, there's kind of 2 types of conventional loans that we see as loan officers, and then they're both conventional. It's just 2 similar but different kind of paths. And so he's saying he's trying one. And I've noticed since January and talking to underwriters, and I don't know if you read the reports that come out from like Fannie and Freddie when they make these changes, but they've started getting very strict on income, and they've also started getting really strict when it comes to credit. So a year ago, the issues that I'm seeing right now, most of the time didn't even come up. So all that to say, that's just general information. Specifically for your client, if they had 4 lates in the last year, what I'm seeing with my clients is people in those situations, like Ida and I actually have a client like that. And he wasn't even late, but his insurance and the car loan company had a miscommunication. They thought he didn't have car insurance, so they forced place insurance, and then his payment did not cover that insurance for 4 months about a year ago now. And his credit had dropped quite a bit. We got it from about 500 up to 660. But the system really doesn't like the lates in the last year right now. And they go behind the scenes and they kind of manipulate the algorithms for when you're running the underwriting system, the automated underwriting system, AUS. And so I would guess, what kind of down payment are they trying to put down?
3% their first time.
3%. Yeah, I would. So I don't think I've seen anybody under 680 in this year be approved for 3% down if they had under 680 credit. Again, I don't, that there could be situations where people do. But even like the client I'm talking about that Ida and I have, he has a lot of money to put down. And at 660, both DU and LP want him to put down about 25%, largely due to those late payments. And again, it's very frustrating for him because, and for all of us, because it wasn't even a true late. He had car insurance, but when he called the creditor, they said, well, we can't take the lates off because technically you were late. We tried to dispute it, but we couldn't get those removed from their report. So I don't know if there were legitimate lates. I'm sure you already looked at that. That's the first thing I would say is, hey, is there any way to get even one of these late payments off? And my clients I've had a few clients try to call the creditors and just ask them for grace and say, hey, could you remove one for us? I know I was late, but I was going through a life event. One of them was going through divorce, and the auto pay stopped working because they switched bank accounts, and it was a whole thing. And the creditor was like, nope, we're still not going to do it. But sometimes they will. So, it's more of a Hail Mary, but that's one thing I would ask them to try, because that could help the credit a lot. And even the risk profile, it might not change the credit score a lot, but they're also looking at the risk behind it. And then I would also share, I don't know, again, I would probably talk to like one of your more senior loan officers that you work with who has access to your system and have them read that report. If maybe you're maybe you're comfortable reading it yourself, but if you do read in there, they will highlight kind of the risks in that reporting. So all of that to say is I would try LP, but LP tends to be more strict than DU. So with 3% down, I doubt that's going to be the case. And if you're around 640, the clients that I've seen around 640, I think there's like 3 or 4 that we've tried to go conventional the last couple months, and all of them wanted at least 20% down. And again, that's general. So we're comparing generalities, not exactly the same. But is there a reason you guys can't go FHA?
Yeah, the immigration status thing.
Oh, yeah.
This happened to me actually. So now that explains it, because conventional has been kind of strict this year. I never thought that it's a recent thing, because, one thing I would say is, especially with late fees, I remember that it used to be 1 year, if I'm wrong, right? If I'm right, if it's more than 1 year, then you're okay to go with it. But now it's been like this is my second client, actually. The other client was, she was working with another loan officer and she lost it. She even lost her earnest money. It was kind of late when he told her that. He thought that he can do FHA because he didn't check her immigration status until it was over. So when she moved to me, I tried to do conventional, I couldn't do. And the same thing happened to another one. So I feel like, because these are really strange findings or results that I'm getting when I try to pre-approve. So, I wanted to hear another opinion, but it's exactly the same thing that happened for both of my clients, that I was not able to get them. So thank you so much. I was really curious what's exactly, I wanted to understand, and probably it's like things are getting more strict now.
Yeah, the credit channels behind the scenes that influence all this, they've got a lot more strict since January. I've had 3 salaried clients that the income, we had to do all this extra work to verify their income. Just overall, the credit channels they're restricting right now. So the banks are nervous, the investors are nervous. So they're being very picky with income and credit. So I'd say for your client, what I would do, if FHA sounds like that's not an option, unfortunately, with that update they did in May, I would probably try to work with them on their credit plan. And if you want, I'll message you privately and send you, there's a company we started working with. There's a few different credit builders I've worked with. Some of them are good, some are not. This company, they're pretty official. They're very on top of it. And they will do an assessment with the client for free and say, all right, let's look at your credit report. Let's see if we think we can help you. And then if they can, I think they have one upfront fee and then like a monthly fee of maybe like $80 to $100 a month. And then their plan is to get you to where you're trying to be within 3 to 6 months. A lot of those credit builders, they will drag you on forever. I don't want to use any names, but there's one company for sure that they charge less than everybody else. But I've had clients that have been with them for 3 years and they've never made any meaningful changes. This company, if they're like, I had a client sign up with them, they worked with them, and they told the client, we achieved about 95% of the things that we think we can achieve. If you want to keep paying us, we'll keep trying to get this other issue addressed, but it's only about 5% chance that we're going to get this late payment removed. So they're very straightforward and honest with people. They don't, for anybody listening, they don't do kickbacks to us or pay us to refer people to them, or there's nothing like that. It's all just, I like working with them because I feel like they do a good job, and it reflects good on me as a loan officer that we have a company that will do a good job helping build credit. So yeah, I'll send you their information. And again, I think the sign up fee is like $200 or something like that. And it's like 80 to $100 a month. And a lot of people tell me, that's a lot of money, but to fix your credit, this could be saving you tens of thousands of dollars just on this mortgage, like when they get a house. And so I would, and they'll have like ask you your goals, how long, the time frame, everything else, and then go over like, is this realistic, or maybe we need more time or whatever. But that's who I started going to instead of trying to be an expert on credit. Like I know it pretty well, but still you want to go, when it comes to real estate, I have opinions, but a lot of times go to Ida. If I'm going to a loan officer, I'm going to, go to someone like you. I'm not going to go to Ida, even though she knows a lot about it. So that's where I started saying, let me find good partners. So I'm going to send you their information, reach out to them, and maybe they can help get your clients up to that 680 mark. Because especially if they're first time home buyers, once they hit 680, I've seen a lot of clients all of a sudden qualify with low down payments. And I've had some clients that were 660, one was 679, and it still wanted 10%. We got it up to 683, and all of a sudden they could do 3%. So don't ask me why the system's like that, but they really like that 680 score. And if your client's at 640, again, depending on the credit report, there is possible that they could get up to that 680 pretty quickly. And then also they'll be saving money because their rate will be better, all of those things. So yeah, so that's probably what I would do if I were you. And you can kind of go from there and just try to reiterate to the client, this is worth it. This is big picture. Let's not think short term. Let's think long term, and let's get you to where you need to be. So then the process will be better. Your rate will be better. Mortgage insurance will be better, and we can get you the house. So that's my advice on that.
Yeah. Thank you. Thank you so much. That's helpful. I will reach out to you to get the link. Thank you.
Okay. Yeah, definitely.
Good.
Yeah. For anybody that's actually asking, there's no, I don't know, are we supposed to say company names on here? But I mean,
No, we don't.
No?
No.
Oh, okay.
No.
All right. Well, if
Like,
anybody's wondering,
resources, they can get resources, but I don't want it to have someone, hey, you gave us this name and we did this, and they made me to feel responsible for something happen. So we don't do, we try not to put names, but, if you can go to www.so-and-so, whatever, we can do that. And they can, it's their own responsibility to check that. Yeah, if you have those things as a resources, you can give it to them.
Okay. Yeah, so yeah, if anybody wants to message me, I can send you the link for that company. So, and like I said, there's no like affiliate agreement. We're not same company. I just found them because I wanted to find a good credit company, and not all of them are great. Some of them just try to put you on a low monthly payment plan, and they are working on it. Like I said, there's one company, they're very big. I feel like more people use them than anything, and I have had clients that have worked with them for 2 or 3 years. And in one day, I was able, just based off what I know, and again, I'm not a credit expert. I know about it, but I'm not an expert. In one day with this client, I got their score up 50. I gave them like, all right, let's do this, this, and this. We got their score up 50 points. That other company been working with them for over 3 years, and they got his score up like 5 points. Like it was nothing, and it might not even have to do with them. So working with good people, and also be willing to pay good people too. You're not gonna, and again, this company is not super expensive. I know some credit builders that charge like $1,500 one-time upfront fee, things like that. This isn't like that. And the other thing is, once you get to that point that they kind of helped you as much as they can, my experience, they're very straightforward with you. So, and it's worth it, because the education piece, you can ask them as many questions as you want. They're experts in it. They can tell you exactly what to expect. So, yeah.
Perfect. Yeah. This is the same thing that I was, we were talking last night on Mickey. He has a platform on that we were talking about credit and how to build credit. There are so many credit builder companies out there, especially that you are handing your social security number and also all your information about you. You really have to watch out who you're working with. There is a lot of scam, a lot of stuff is going on in the world. So because of that, we really need you to think through when you're trying to build your credit. You need to find a company that, one, they are certified. Second, how they're going to secure your information. And if you don't do that, that means you are open another door to get a mess. So Peter said earlier, while we're talking this, if you guys can tap and not copy link, it would be fantastic. What Peter was mentioning, that there are companies that will charge you a certain amount of money at the beginning, but they will say that they were working on it. Literally, they're dragging their feet. And all of them, they have a different strategy. And the strategy, you need to understand how, if you wanted to go to the cheap way to build your credit, and you need to figure it out, what is that cheap way? If you wanted to get your stuff done right away, you could get it done. So we had a client, Peter mentioned that to us earlier, because of his car insurance. I think it was like $20 different on the payment. He did not even know that her car loan company were, making him, they reporting him and his credit that, he was not paying fully. So because of that, he got dinged. It is not even his fault. So that's why we say that you need to watch on your credit card, your credit score, the way that you check your bank account every day, every other day. And if you don't do that, it will be a hard journey. You feel like you fixed something, but it is not fixed. And not when you use your credit card, we talked about it yesterday, and I'm gonna saying it here, do not use your credit card to the limit. If it is $1,000 limit that they give you, don't go to 900. Then you drop your credit. And you do this and that. So we'll talk more detail. I think we have a guest, Ramon. Good morning. Yeah, I think he's or she is mute. Okay. So, yeah. And I think someone mentioned something earlier that it is not a good time to buy. And I am a realtor. I think, Mickey is a realtor and a loan officer, and Peter is a loan officer. I don't know. You're good. We cannot hear you.
Okay, there we go. I was just going to say quick, I got to step out for 1 minute. I'll be right back. But if you look at the background on my picture, because I have some comments on that too, it's a map, basically like a heat map, based in May off of housing and where things are at. So if I stop blocking this here, I guess the picture is a little zoomed in. I'll try to, as soon as I come back, I'll try to figure out how to do this. But it's showing housing and how much it's holding its value. So red, the more red it is, the stronger it is. So you can see in Minnesota here, it's very strong. Down in the south, it's different. So I was just going to say local markets are very important, but I'll let you keep going.
Okay, thank you. You see, I like that. Somebody coming up with the actual thing for us. So with that said, literally when we say that it is not a good time to purchase, we have to have some evidence, okay? It is not good time to purchase. It might be for certain people, whomever those people are. For me, I am still busy. I close, the lowest is one deal a month, or the busy time, like last month, I closed 4 deals a month. So it is not about, it is not a good time. There is always, it is not a good time. Thank you, Mickey. There is a, oh, thank you. He made my goal. Woo. Okay, perfect. Thank you. There is always a good time to purchase when you are ready. If you have your closing cost, if you have your down payment, you are ready to purchase. I think what we're looking at when we say it is not a good time, we wanted to have the interest rate to go down, the house rate, the house value to go lower. If that means everybody is ready to buy. So as an investor, what I want you guys to think yourself as an investor. Yes, you're going to be a homeowner, but I want you to think about yourself as an investor, how I'm going to buy this property, live in it. If I don't want it, I will rent it. Don't sell house, okay? That is your stock market. Then you rent this property, then you go and buy another primary residence. That's how American people that in the US do. Most of them, they pass their money to their family member. So I want you to think as an investor, and you just need to think through how you wanted to make this thing, especially if you have kids in the US, what are you gonna left for your kids when you die? Point blank. Do you want it to be in a place that you live in an apartment and your kids, they're gonna continue to do that because they don't have nothing that you work hard, you came as an immigrant, or people that who lives in the US who lived in here, what kind of stock that you're gonna transfer, or your money, how you're gonna transfer to the next generation. That's something that we're talking. Yes, for certain people, it is not a good time to purchase. Right now, I have 2 boys who is gonna go to University of Minnesota here in local. And instead of us paying somebody else's mortgage, we are trying to get them a condo or a townhome or even a single home in that area. They can live in, they can pay the mortgage, and plus they can have roommates and they can start investing on themselves. And to be honest, as a realtor, an investor, I don't want it to pay somebody else's mortgage. I don't have the energy. I don't have even like when I think about it, I feel like I'm throwing my money to somebody else's pocket. No. It is so hard for us to make money here. We are working hard to make the money, but I'm not planning to send my money somebody else's pocket. So somebody else's mortgage, it will be paid by the money that my kids are when they rent somebody else's house. I don't want it to do that. So if I can do it, you can do it. To be honest, I'm not rich, but I am okay where I am. And I kind of still dissecting how these people became who they are, how they went there. I started it late. Me and my husband, we started it late, but I wanted to get to what we need to get to. So I'll stop and I will let Ramon to ask the question. Then we can go from there. So audience, if you guys are really help us out, if you can copy link and tap the screen, we really appreciate you. We give you some scrambled egg with everything in it, with nice toast and with coffee this morning. Good information. So just think about that food and just tap the screen for us. Go ahead. Ramon, do you have any question?
Oh, I think she just said you answered a question.
Okay, perfect. You see, I read your mind. But you know, every Wednesday I play psychic too, by the way.
And if you don't mind, I have a couple things to say about that too to follow up.
Okay, I'll put you on the big screen because you have your stuff in there.
Oh, yeah. So I was just gonna say, and again, I missed part of what you said, so maybe I'm reiterating the same thing. But housing is very local. So as you guys can see, if you look up in Minnesota, that big red circle is the Twin Cities. You can see housing is very strong there still. If you go farther south, you see where those dots start to change colors. That's where things are getting more loose. Not to go into every detail because that'd be probably 20 minutes of every part of the country, but the South and like Texas, Phoenix, all those areas are starting to see a lot of softness in the market, as they say. Minnesota is holding the value is holding value very strong. And also, like, I'm just trying to, Minnesota all the way over to the East Coast. So if you almost draw a straight line from like the Twin Cities over to New York City, that whole area of the country is still staying very strong. Not to get political, but everything that's happening in New York City, if I forgot his name, it's like starts with a Z. If he gets elected mayor, there's a lot of people claiming that that's going to negatively affect that housing market because he really wants to have the government take over a lot of housing, he said. And basically the government owns the house, and that's a whole nother debate. But outside of something like that, like I said, from Minnesota all the way over to New York City, that whole part of the, the top part of the country, right about here across, is still very strong. And I'll post these. I'll post this and another graph too. These are from Resi Club. It's a company that does a lot of data reporting. They're really good. So some of it's free, some of it you got to pay for. But I'll post these on here. But again, you want to look at your local market, and you also want to look at your own values, your own prerogatives, your own priorities. Logan Chami is one of the top housing analysts in the country. He works at Housing Wire. They're probably the top housing, residential housing analysis company. He works with Mike Simonson. He had started his own data company, and now they both work together. They're probably two of the top people. And one thing that Logan always says is, if you don't know if you should buy a house, you shouldn't buy a house. And basically what his point is you should know why you're making the decision you're making, especially on something this big. If you're with all your friends and everybody's buying an ice cream cone and it costs $5 and you do it, and maybe it upsets your stomach or, it's just not very healthy, the negative effect is pretty small. You lost $5, you get to enjoy some delicious ice cream, and maybe it's not the greatest for your health, but it's, it's an ice cream cone. Yeah. Financially, same thing. If you go spend $10 on something that you shouldn't have one time, it's not going to have much effect on you. Buying a house, that's probably for most people the biggest financial decision of their life, because when you look at how it affects you, the length, how it affects the quality of your life, how it affects your finances, everything, that's when you start realizing, like, I want to be smart in the way that I go about this, and I don't want to just jump into it. I don't want to just right now it's very popular to chase free money. There are some government-backed programs that are actually really good, depending on your situation. If you qualify, that is almost as close as you can get to free money. But a lot of the down payment assistance and different like salesy things out there, that shouldn't be, in my opinion, just my personal opinion, a reason to buy or not buy. It should be based off of your priorities. Yep. And again, your long-term plans. And if you work with a good loan officer, they should be able to help you talk through that, ask you questions to think about. If you live in, let's say you live in Minneapolis, and in 6 months you're going to take a job in California, and you're planning to live there for the rest of your life, it would not be a good idea, usually, unless there's some really weird circumstance, for you to buy a house. If you're going to buy it and keep it maybe and rent it, okay, maybe there's that. But if you're going to buy and sell in 6 months, the cost associated with the transaction is not going to be worth it. So, but if you plan to buy a house, like I bought a house last summer through Ida as my realtor, and I bought it a little bit outside of town. She's kind of laughing at me like, wow, you're kind of outside here. And there's a lot of people who have done that during COVID and over the last few years that have regretted it. Me, I've lived outside of the cities before. I did for a couple of years, and I loved it. I grew up in the city, everything else, but I knew that's where I wanted to end up. And I bought this house, and I plan to keep it for the foreseeable future, probably at least 10 plus years. So that is much different than like a client that Ida and I helped a few years ago that said, hey, we're going to retire in 5 years and move back to India. Mm-hmm. So in that situation, it was, okay, well, then we want to look at it from this, and this perspective. But again, me, if I'm planning to live here long term, that's a little bit different, because home values in the U.S., outside of 2008, when they were basically giving people loans without checking anything, it went down 1% one time since 1941, the home values. So home values almost always go up. And again, that doesn't mean they can't go down, but just looking at historical data, that's the facts. And right now there's a lot of what they call like doomers online. And some of them have valid points, because I'm not trying to pick a side. I'm just trying to understand it for my clients and myself so I can give good information. It's very popular to claim that housing is going to crash and this and this and that. What caused what happened in 2008? They were, like I said, they were giving people loans. There's a woman who said she was a janitor making $50,000 a month, $50,000 a month. So over $500,000 a year as a janitor. And she bought 8 houses worth over $2 million. And this was in 2003 to 2006. So those homes now are probably worth twice that, or we'll say 30 to 50% higher at least, minimum. Yeah. So it's more like if she bought $3.5-4 million worth of homes. And again, she didn't have a job and she got approved. So that's now, as Raquel was saying, their underwriting guidelines are super picky. Like I said earlier, we've had 3 salaried clients. One of them was about $100,000 a year. So whether you call in sick, whether you work 35 hours or 45 hours, you're getting paid that money. We still had to do additional things to verify it. So there's, I don't know what happened to my screen there, but so there's sorry, it just threw me off. I just lost my train of thought.
So you were talking about
yes, just through a recession. And I'll post the graph from a recession that we're send out to clients just on a drip campaign to just educate. If you look at the last 6 recessions, only one has had home values really drop, and it was the 2008. So again, don't buy a house just to buy a house, but especially if you plan to be there for 5+ years, even in 2008, when we had the housing crash due to problems in the housing market, the home values, and I think in Minnesota, they went back to about where they were after about 5 years. So if you plan to live there for 10 years, the home value, unless something unprecedented that's never happened before happens, it's going to be back to the same value it was. Now, is that ideal? No. But the other thing anybody who owns a house will tell you is the quality of life factor. Anybody that's rented, especially if you have kids, you know what it's like. And if you don't have kids and you had somebody who has kids that lives above you or next to you, you know what that's like. And me personally, I'm not a big fan of neighbors. I've had some pretty crazy neighbors that literally had mental issues. So just crazy stories I could tell you. But I like where I moved. I don't have any direct neighbors. It's a lot of space. For me, that's peace of mind, and it's important to me. To you, I have a friend, a close friend, they love living in the city. They would never move here. They would hate it. Mm-hmm. So again, it's not right or wrong. It's just understanding yourself. and asking those questions of like, what am I trying to accomplish? What are my goals? What are my priorities? And how does this fit into my life goals and everything else? Because the other thing is people who own homes versus people who rent. The latest statistic I've seen is people who own homes, their total net worth, and this kind of goes into Ida talking about what do you want to build for your family? What do you want to build for your future? Is 40 times people who rent. 40 times. Not 40% more, 40 times more that they have financially than somebody who rents. And a large part of that is because the home values keep going up. And so if you bought there's somebody in California I just saw yesterday, they bought a house is like 1969 for $75,000. And now they're selling it for $1.1 million and $75,000. So they're selling it for $1.1 million more than they bought it 40 or 50 years ago. And again, that's a long time. There's no guarantee it's going to go up that much. Minnesota wouldn't go up that much. Their prices have skyrocketed. But it illustrates the point that if this aligns with you, the whole like doomer thing about home value is going to drop 30, 40%. They didn't even drop that much in 2008 when we had the housing crisis. That was caused by housing mismanagement, bad lending, giving people what we consider toxic loans. It'd be the equivalent of like your friend who never pays you back coming to you and saying, hey, give me your life savings. I'm going to go do this, buy a house with this. You would never give that to them. You're like, I gave you $5 this time, $10 this time, $100 this time. Every time I ask you to pay me back, it's been 5 years. You always got an excuse. And now you want me to take out all my money and just give it to you? You wouldn't do that. But what happened in 2008 was the government came and told the banks, if they don't pay you, we'll pay you. So if I told you loan money, it doesn't matter who you loan it to. If they don't pay you back, I'll pay you back with interest. You're going to give money to everybody. You're going to go down the street, downtown Minneapolis, or wherever you live, and you're just going to be handing out, you want $100,000? Here, take $1 million, take $2 million, because you're going to get paid on that. It's like a cheat code. And that was a totally different situation. So anybody who's comparing this to 2008, they might be well-intended, but it's not the same situation. And again, you want to make a decision based off your priorities, not just because home values usually go up, but the fear and, the doomers scare you into doing something. That's what happened to me too. I probably told the story already, but 2010, I was going to buy a house. I was new to the industry. That's when I started. And I worked at a big bank and a lot of the people I worked with had owned their own companies. When the crash happened, they had to go work for bigger banks because their companies went under. And they all scared me from buying my first house in 2010 because they're like, oh, it's going to crash again. We're going to have a double dip recession. Home value is going to crash. Don't buy it. Wait till like 2012. And then it was wait till 2014. And then it was wait till 2016. And then it was wait till 2018. And then it was 2021 was going to be the big year when housing was going to crash. And we all saw what happened in 2021. Mm-hmm. So a lot of these people, even if you go look up Logan Montashami, he has basically lost his patience with these people, and he will explicitly call them out and challenge them to a live debate just like this right here and say, let's talk about it. Let's talk about your predictions. What are your models like? How are you coming up with the numbers you are? Yeah. And very few people will talk to him, especially these big social media accounts who make a lot of money by telling people everything's going to crash. Like one of them yesterday, he's very big. He used to work in the mortgage industry. He's got tens of thousands, 20, 50,000 followers. I don't remember what it is. And he refuses to have a debate about it because he knows what he's saying is garbage. And that's his whole model. He gets paid, I don't know how much through social media, but makes a lot of money telling people what they, scaring them. But he will not have an honest conversation about it. And, so just be careful who you're getting your information from. Know your topics, do your own research, verify things, look at, and you can even do a lot right now, even with the Chat GPT and Grok and all the Perplexity, all these different systems that are out there to look up information and then just cross-analyze it. Be like, okay, this person said this. Does it line up with this other stuff that I've researched? And remember, everything's a journey. Anything worthwhile is a journey. The easier it is to get, the easier it is to lose. If you getting a house is not super simple. You want to make sure you're educated on it. You want to make sure you understand it. And also, I'd say ideally, you want to work with a loan officer, again, who's going to look at your whole profile. We like to brand ourselves as debt management. If a client tells us we don't want to deal with that, which decent number of, so I'll just say this. I work with a lot of immigrant clients, not just IDA's clients, but other clients as well. And the American clients, the people who grew up here that have money and that are well connected and everything else, the one thing that they're very, very good at is listening. They're very, and when I bring up like, oh, we do debt management, we can review everything, blah, 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 they will sit there and they will listen and ask questions, and they're not just going to blindly accept anything, but they realize the value in it because they understand how the system works, because they have family members, they have friends that have all grown up here for multiple generations and said, you've got to make sure you do these things. And so I'd say take that, work with somebody who's going to give you that value, because we charge the same whether we give you that value or not. So you might as well take it. And even if you end up not following it, or you only take a little bit, if you get a little bit from me, a little bit from Ida, a little bit from this person, that person, over time, that's going to build. And for me, I'm trying to build all this for my kids, because, and I'm going to stop after this, but when I research very successful people, if you look into their lives, most of them were second generation. They had parents, fathers, mothers who really built a solid foundation and figured out things. If it's our first time doing it, there's a lot of things we got to figure out. I might spend 5 years learning a lesson about this, or this. Well, when my kids come around, I not only want to learn that, but I want to learn how to convey that to them and teach them that, so they can learn it in 5 days or 5 months instead of 5 years. And then if I can do that with like 10 different things, and that's 50 years worth of lessons, and they can learn that in 5 years, at 25, 30 years old, they're going to know what I knew at 60. Think about if you could go back to 21 and know everything you know today. So that's like, just to bring it all around. That's me. That's what drives me, is like everything I learn, I'm making sure to pass on to my kids. I write it all down just in case something happens to me. Because I got a 3-year-old and a 6-month-old, so they're not quite old enough to talk about this yet. But if you need the why behind what you're doing, you need that drive, you need that motivation. For me, as my kids, and I want to see them succeed, and I don't want to see them have to struggle with the things I struggled with. So that's my little speech on that.
That's it. Exactly what I always say in Amharic is the same thing that what you said. I am the first generation in my family who came here in the U.S. Even though that my parents know what's going on in here in the U.S., but they never lived in. So when me and my husband came in the U.S., we lived in here over 30 years, trying to dissect the information that we can get out of like the people that were born and raised in the U.S. So if we don't do that kind of stuff, there is no way that we can transfer the wealth to the next generation. So sometimes when we come and talk about this thing, we are not here to pressure you to buy. We wanted to give you some information. So the reason that we all come in here, talk about real estate, to be honest, what me and Peter go through day to day, transactional thing, sometimes I just wanted to just quit and just run away, seriously. Because you tell them not to do this and this and that and this and this. 5 things, right? From 5 things, they will do the 2 things. The other 3, they don't do it. They were like, we told you not, like we mentioned this thing. We even gave you a paper that do not do this thing. But it's okay to do it. This and this and that and this. They literally will say, I do not think that it matters. It matters. If it was not matter, then it just, bottled us these things every day. So because of that information, I always say this thing. In a first-time home buyer and people our community, we do not have enough information. We take the information, what is our friend is telling us, what is our coworker telling us. So because of that, we have this fear working with someone, and that you don't build that trust. So if you are literally sitting on the edge all the time, purchasing property, purchasing anything, if you always think that if this is gonna happen to me, that fear is not gonna get you to go far. So the fear, the information that we given it to you, if you're not following that direction, you are not gonna go the direction that you wanted to go. So I see someone comment earlier that kind of controversial kind of a thing in Amharic, knowing that, we speak the Amharic language in here. And I think Mickey answered him a good stuff. It just, if you are not interested with the subject, please scroll and go to another direction. We are here to support the community. If this is not your thing, this is not your thing. Don't use your finger to write something that it is really does not make sense. Okay. With that said, I would like you to guys to push our tap the screen at least to go to 30. I was so impressed this past Saturday. We had close to 74,000, and there's 33 people here. I would like you to tap the screen, and also if you copy link it, so then the algorithm it can flow, that whenever I go on Sunday for teaching, that can help me. So it would be good. It would be nice. You guys are getting enough free information that you don't even pay for it. It would be good if you can do that for the heck of being your due diligence part. Okay. So we talked about credit, right? So credit, for us, it's a huge thing. So another thing that I wanted to wrap it up, I wanted to mention there is 38 people on TikTok, and I really asked to tap the screen, but I don't see anyone is tapping the screen. So it would be nice if you guys can do that. We're really not begging, but it's a nice way to support your people. Another thing that I wanted to actually wrap it up with our conversation, Peter, we have kids in here, and most of our kids, when they start going to college, they have zero credit, zero. And they struggle to build their credit. They don't know what credit is. And if they know the credit, they just don't have no idea. So what will happen is this kid cannot even get a student loan, a car loan. And then if they, let's say they went to school for a couple of years and they wanted to hire, certain kind of job, because if they don't have a credit, sometimes they reject it. So what do you think about that? So let me mention my story. I did that yesterday at Mickey's house. With my kids, I have one who's going to turn 22, and I have one who's going to be 18. in close to 7 days. So I start building their credit at the age of 15, 14. So the way that I did, one, the best part of it in our district, the school district that we're in Minnesota, they kind of teach them how to balance their check. They even have class that they used to give it to them. I think they still do, and I have not heard from my third child yet. But how to balance your check, the money that you get paid, and deposit it in your account, how you can manage paying a bunch of different stuff, and still you have some money in your saving. So there is a way that we taught them how to do those things. But, we open an account for them. They have allowance, and they have their Christmas money that they get from family members. So they play around with that money, how they can save it, how they can go and get their candy and this and that. But we help them to build their credit by putting them as a primary owner or primary credit card holder. It would be us as a parent, me and my husband. And then we put one of our child in that credit card as a secondary user, putting their social security, their name, so they're going to end up having their own credit card. That we started 14, 15. So they use that credit card and they are building their credit. And by the time they turn 18, they will have that credit built, and also they duplicate our credit score. Means that credit card and myself, we have not had any late payment, and I have not had any issue with that credit card. And plus, with my credit, I work on my credit every day. The way that I check my bank account every day, I check my credit every day. So we build the credit. So with my oldest one, 2 weeks after he turned 18, I told him to download Credit Karma. And then when he, after 2 weeks, I think 2 or 3 weeks, they reported his credit to him saying that, hey, your credit is at 812 or something like that. So he duplicate my credit score. And also he already built his own credit. And after a couple of years, you can get them secure credit card and you can pull them out from your stuff. So if they make the payment late, it's gonna ding your own credit too. So you became, a co-signer for that person, right? So, and the credit card that I had, I owned that Discover card for over 21 years. So it has a long history. I did not put them like the one that I opened like 2-3 years ago. It has that credit. So when you have that long credit history, you are literally transferring that credit, all that history to that person. So your credit has to be really good, or work on your credit, and also have something that you can oomph to your kids. So that is, I call it some kind of saving that I provided to my kids, that, hey, this is a saving. This is a big thing. In life, you have to have a credit. Why you need a credit, and why they need to watch on paying their payment, paying this on time, and that they do all that. It is the bill was attached with their checking account. So every month we'll withdraw the amount money that they own. So I get an email, they get an email, how much that they owe, when is the due date. I usually remind them because I don't want them to screw my credit. I'm not paying their dues. I swear to Lord, I have not paid their credit card. Noah been paying his credit card the past 6 years. Khalid been paying his credit card. He's going to be 18 in a couple of days. He's been paying his credit card with American Express the past 3 years. So with all that, how we can build their credits, it's something that we can work on. So I will let Peter to spill his insight, then we can wrap it up. We cannot hear you, Peter. You're muted.
There we go. Can you hear me now?
Yes.
All right. No, I was just saying that's a lot of good information and good perspective on it. And on on the flip side, I'd say there's some people who have tried to use their kids' credit before to do things. Don't do that to your kids. I've heard some horror stories. People turn 18 and their credit score is like 350 score because their parents tried to take out loans in their names and things, and don't go that route. That's a really bad thing. But getting back to building credit, if anybody on here doesn't have a credit score, and you're trying to build that up and get a credit score reported, I would say if you're in the camp where you just haven't had credit for a while and you used to it, your credit score, as soon as you get a card or anything like that, will probably go back to similarly where it was before. So I have a client, she had 770 credit, closed all of her credit cards like 3 years ago. And in February, she had 770 credit. In April, she went to go do the house. We pulled credit and her credit scores were all gone. So for her, she couldn't get, most people just have credit cards, but there's two types. There's secured and unsecured. Unsecured is what most of us think of. We open it up, they approve us for a certain limit, and we use it, and we pay it off every month. She couldn't get approved for that because she didn't have a credit score. So we signed her up for what's called a secure credit card. And the one that I'm talking about, they report very quickly, usually within like a week or two of you using it the first time, and then keep reporting it. And a secure credit card, you have to put the money up front because basically you don't have a credit score. So it's like if I came to you, you've never met me before, and I said, hey, borrow me $200. You'd be like, I don't know you. Like, how do I know you're going to pay me? Mm-hmm. So a secure credit card, you give the same money for whatever the total limit is on the card. So in this card's usually about $200. Excuse me. So when you sign up, you go through the process, they look to approve you, and then you deposit $200 in their account that they hold. They don't spend it, they don't use it, they just hold it. And then they give you a credit card with a $200 limit. And if for some reason you max the credit card out, you never pay them, they already have that $200 waiting there, and they just use that $200 you gave them, they pay off the credit card and close it. But as long as you pay it every month, they will continue to report that, hey, you have a credit card, we gave you credit, which is like a mini loan. A credit card is like a mini loan, and you've paid it every month, and we're going to report that to the credit agency. And then that will help you build credit. Now, it can take, usually they say up to 6 months for your credit score to be created after you open credit. But the more credit lines you have, usually they say if you have no credit lines, so no installment loans, personal loans, credit lines just means all the different types, credit cards, anything like that. Ideally, you want to open 2 is what the credit agencies tell us, or the credit builders tell us. So, like I said, I have access to one. You can actually open 2 through it. It's basically the same one. You put the money up, you get approved or denied right on the screen. They do a soft credit pull, I believe. So it's not even a hard credit pull. And then they'll mail you the card, you use it. And then eventually, as you build up your credit, you'll be able to get an unsecured credit card. And as your score goes up, you qualify for car loans, all that type of thing. But if you go into a car dealer, you come to a mortgage company, anything like that, usually it's very hard to buy anything without credit. We do have a loan program. There's a few lenders that have loan programs if you don't have a credit score, but they're higher risk because they don't know how to assess you. So the interest rate's going to be higher. The costs and fees are going to be a little bit higher. So if you really need to buy a house now, those programs are good for that. But it's not going to be as good as your traditional loan because you're higher risk. Yeah. So I would say, if you want, you can reach out to me. You can look it up online. There's a lot of different versions of secure credit cards, but the one that I know of, and again, we don't get any type of benefit from this personally. We just try to do this as a service for clients and try to help support them. I can send you the link to it, and you can do it all yourself, set it up, do it. But that's how I would probably try to build my credit. The other thing is, like Ida said, if you have somebody, like this other client, she didn't have anybody that was close to her, they could add you to their credit card as an authorized user, or, just a little disclaimer about that though. If they add you to their account, any late payments, high balances, anything like that can also negatively affect you. And also, if they don't pay the credit card, you're liable legally that the lender or the bank or whoever gave that to you and put you on there, they can come after you to pay that bill. So you have to be very careful if anybody's adding you to their credit card, because, Ida with her kids, family, that's you want to make sure, even if it's family, you're on the same page. But if you're being added to a friend or somebody else and then they just disappear on you and don't pay the bill, that will really hurt your credit. And I had a friend that happened to with her boyfriend. She got added on all his stuff. They added each other, then they broke up. He stopped paying all his bills, and she had to pay about $11,000 to pay all that stuff off. And it dropped her credit score in the 500s, and it took her about 2 years to get her credit score back. So not to scare you, but don't just, pull it up at church or at the park and, hey, okay, I just add me. Like, make sure if you're added, you vetted the person, you have a good relationship with them. And in romantic relationships, if for some reason you guys break up, just maybe make sure that that's not going to come back on you. So, but I would say probably the most tried and true way is start with a secure credit card, build it up. As soon as you get a credit score, you can go get an unsecured one. Depending on who you got it through, sometimes it'll change it from secured to unsecured. The one I have, it's always secured. They don't flip it, but you could just go to the bank, credit union, whoever, and then get your credit card at that point. And then as far as building goes, use it every month, like 10 to 20 bucks. You don't have to max it out. Make sure it reports. Credit Karma is a great app for that. It's free, and it shows you an estimate. It's not the exact score, it's an estimate. But it'll show you, hey, it reported this month, then you go pay it off. Then you go use another 10 bucks, make sure it reports, pay it off. And you can actually do that like every 2 months. You don't have to do it every month. So you can use it, it reports, pay it off, wait till the next month, use it, reports, pay it off. And that's like mini loans, like I said. And those mini loans will build up. It'll show, hey, this person always pays back their bills. They pay it on time. And then you can build it from there. So, yeah. So reach out if you guys want the link to that.
Perfect. Thank you, Peter. So we're going to be wrapping up. We have 2 to 3 minutes left. We will introduce ourselves. I don't know if Mickey is around. He'll probably be doing his thing with a different client. So let me introduce myself to you guys. If you guys never met me or never been on my platform, I am a licensed real estate agent in the state of Minnesota, and plus a team lead and a property manager. And my name is Ida Tazara. I am always here for you guys if you guys need any help to purchase a property, to sell a property, even if you are in a different state. I'll be able to connect you with other agent or lender that you're looking for. I have this belief that I consider, let's say, quote unquote, I always tell everyone before you hire a real estate agent or a loan officer, make sure to do your due diligence. That means interview the people that you are hiring. Here in the US, as an agent, or like Peter, like Mickey, who are a lender, they get interviewed by people who are born and raised in the US. When I go for listing appointment, I feel like I'm getting hired a corporate job. They got the list of stuff. I get questioned this and that and this, why I am the best agent than the other agents and this and that. So we have to be an expert of what we do. If we don't, we are not going to be qualified for that job. So because of that, we try and educate ourselves. We are licensed. And also, we take continuous education class every year. We have a test to take to renew our license. And what we're here to enlighten your brain, what you think of, what are their negative and positive information that you're getting, and we wanted to give you that. So the reason that we brought today, why credit matters, that's what we talked about. A lot of people, they don't think about credit. People use only debit card to do a lot of transaction. But while you, instead of using a debit card, you can use your credit card and pay the money that you charge, knowing that is your, money that you used, and that's not yours, so you need to pay it. So we talked about those things. And if you guys are looking at this information, that what we talked about today, if you are just got here late, it is going to be in my YouTube account. It is Gojo Realty. Thank you. It's going to be in Gojo Realty. You can find it in all this information and more, what we teach every Sunday. That's one. And then if you cannot find it, you go to, in my bio, there is a link. And if you click that link, it will give you all my social media. So you have my YouTube account, you have my Facebook, Instagram, you name it, all the social media. I am in all social media. You guys can figure me out there. If you have any question, you guys can reach out to me. You can DM me. My toll-free number, the 877 number, it is on my bio. Do not text me on that. Just call me. And don't leave me a missed call. I would like you to call me and leave me a message, because our phone number, it is all over in social media and everywhere in the internet. We get a lot of scam calls. We get a lot of sales call. So because of that, if you don't leave us a message, I would not. Sometimes I see the name. If it is related to me, like an Ethiopian name, I will call that number. But if you guys don't leave me anything, if it says like Twin City or Minnesota or whatever, I'll be like, okay, must be a scam call, and I'm not gonna even planning to answer it. While I was here, literally, I got like 7 different calls today. I don't know who those people are. They have to leave me a message. Like within an hour and a half, I got 7 calls. And that's how our phone rang for a lot of sales stuff. So with that said, someone asked me earlier, where are you from? Where do I live? I live in Minnesota and in the Twin Cities. But if you are in a different state, you wanted to purchase property or even commercial, I do commercial. And if you need any idea, free consultation, you guys can call us and reach out and we can give you that information. With that said, I'll pass the mic to Peter. And if Mike is here, he can introduce yourself. If you guys don't know Mikael or Mike, he's a loan officer and a real estate agent in Virginia and DC area. I would love for him to come and do that. But if he doesn't, Peter can go ahead and do your thing and then we can close.
Okay, yeah. If he wants to jump in, just feel free if you're listening. But yeah, he might be in the middle of some work stuff. Yeah. But yeah, no, I'm Peter Jerf with Custom Made Mortgages. I'm also based out of the Twin Cities in Minnesota here. We are only licensed in the state of Minnesota, but like I just said, if you need a referral, she knows a lot of good people. We know a lot of the same people. Yeah, we can help get you connected where you're at. And obviously, you have any questions, feel free to reach out. Any of the things that we talked about today, links to things. Again, at least my company, I can say for sure, we don't have any sort of actual official affiliation. Any money going back and forth between companies, even with Ida, who I've worked with probably longer than anybody else. We don't do any of that. There's no, you send us clients, we pay you, or we do like none of that stuff. So we do this all just with the mindset of helping people. We get paid, so we don't need to try to pinch every little penny from everybody from every angle. We're just here to help. And like I said, we get paid to do our job. We try to do it the best we can and to support you guys and help as much as possible. And so, yeah, if you guys have any questions, feel free to reach out. And we'll be back here next week at 9 a.m. Central Time, from about 9 to 11 Central Time. And if you guys have any questions, even if it has nothing to do with the topic that we're discussing that day, always feel free to ask in the chat, join the chat, message us. Because, yeah, we're really, like you said, trying to help people and trying to help educate on just this whole home buying process, real estate, personal finance, all of those things. So otherwise, I think that's about all I have. Have a wonderful July 4th weekend, and see you guys next week.
Yeah, I forgot. It's a July 4th weekend. Thank you, everyone, seriously, for tapping the screen, listening to us. When we tell you guys tap the screen, you guys are willing to do that. We really appreciate you. We'll talk on Sunday. I'll be on Sunday as well. If you guys have not follow us, you have a time to follow, and reach out anytime. We'll talk to you guys later. Thank you so much for coming.